Well, if that sounds ominous, which it is, hey everyone, Luca here. Thanks for tuning in again, and I wanted to take this opportunity to catch up on the market and where we are in this last week of October. Daylight savings time this Saturday night. Hey, you get an extra hour of sleep for those that want to stay a little longer. Anyway, the keyboard sound there was because, you know what, we dodged a bullet yesterday. Tiff Macklem, Governor of the Bank of Canada, held the overnight lending rate. Presumably that's going to translate into retail lenders, chartered banks holding their mortgage rates and not increasing. Not necessarily a guarantee, but everyone would think that that's going to happen. So that's a good thing. Good thing for the market, where it gives consumer confidence a bit more boost. And where are we? We're in what I would call a balanced market right now. Neither a seller's market nor a buyer's market. We're seeing a lot more inventory than there is demand in the marketplace. So things are shifting. I wouldn't call it a buyer's market just yet though either, because the number of buyers in the marketplace is fewer than we had due to the higher interest rates, right? People are just having a harder time qualifying for their money. So what does that mean for you and for us? Well, it means that, you know, if you're thinking about entering the marketplace, the good news is if you qualify for a rate today, presumably you're going to be able to keep that rate and it's going to hold. I think in the lending world though, if you're qualifying for mortgaging, I think that the days of the variable rate are over for right now. Not to say that they won't come back, but fixed rates seem to be the more competitive rates out there in the marketplace. If you're selling, there's still buyers in the marketplace. The market hasn't crashed, the bottom hasn't fallen out. There's still properties coming for sale, and they're still selling. It's taking time now though, right? And that's going back to, I've been in it long enough, as I've said, going back to marketplaces where it's now going to take maybe 30 days, maybe 45 days, maybe up to 90 days for a property to sell, depending on location, of course, and depending upon price point. The one thing that I can tell you that we're seeing a lot of, and this speaks to how values have just risen regardless, even though they've dropped from pandemic levels, they're still higher than pre-pandemic levels. But I know in my 35-year history, I've never seen more properties listed over $1 million, over $1.5 million in and around the Kingston area. So that's still a marketplace out there. And let's understand this, you know, regardless of all these interest rate hikes and the fear of inflation, and I don't necessarily agree with Mr. Macklem and his strategy to date because it hasn't stopped. I've talked about this before. It hasn't stopped two major things that are affecting people's pocketbooks: prices at the grocery store, prices at the gas pumps. Interest rates, in my opinion, there isn't a direct correlation in helping to bring those items back into line. We can argue economics later on, and I'm sure somebody can reach out to me and school me on that. But anyway, going back to, we're in a decent market. There's activity happening. You know, my group is busy. We've listed a bunch of great properties. We're getting activity on them. We're getting inquiries on them. So there's people out there still looking. And you know, yesterday's announcement, I think, as maybe as anticlimactic as it was, still carries, I think, some significance in the sense that it's going to boost consumer confidence in the marketplace. So those that are definitely qualified and ready to act can do so with confidence, knowing that they're going to lock in and things are going to stay, let's hope, fairly stable. Tiff Macklem was interviewed this morning on the CBC on The Current. I listened in specifically because I wanted to hear what he had to say. They're hoping by January of 2025 is when when inflation will come back to the levels they want to see. That doesn't necessarily mean that rates won't come down before that. He said they're keeping a very keen eye on all of those levels, of course, in markers, to determine whether a rate hike is going to be necessary, or even by the middle of next year, whether rates can start to come down without having, again, inflation running out of check. So in saying that, if you have any real estate questions or you want to reach out, please don't hesitate to do so. We're happy to have all of these conversations with you in person or over the phone or wherever you like, over a coffee. Happy Halloween, everybody, for those that celebrate that. And again, don't forget to set your clocks back, and we'll touch base later on.